Welcome to Drift Shield, your primary destination for practical, accurate, and responsible automotive financial advice. Navigating the modern personal insurance market after receiving moving violations or facing major traffic convictions can feel completely overwhelming. Insurance providers rely heavily on predictive data models to assess risk, meaning any negative mark can cause your premiums to skyrocket overnight. However, being categorized as a high-risk motorist does not mean you are permanently locked out of affordable coverage. In this video, we explore actionable strategies that will help you rebuild your record, secure proper coverage, and systematically lower your car insurance rates. To understand how to reduce your car insurance costs, you must first understand how insurance companies evaluate risk factors. When an underwriter looks at a motor vehicle record, they are essentially trying to calculate the probability that you will file a claim. Minor moving violations suggest a pattern of risky behavior, while minor fender benders indicate potential liability for property damage. Major infractions carry the highest weight because they represent severe financial liability. Each violation adds points or risk markers to your profile. This shifts you from standard insurance pools into non-standard coverage tiers, leading to a substantial increase in your baseline premium rates. Drivers with serious violations often see monthly premiums double or triple. Additionally, providers may require higher deductibles or limit payment schedules. Recognizing these cost structures is the crucial first step toward taking control of your financial situation. Approach your insurance not as a static expense, but as a dynamic financial metric that you can actively manage and improve. One of the most powerful strategies for high-risk drivers seeking affordable coverage is committing to extensive market shopping. Different auto insurance companies use completely different underwriting algorithms and pricing formulas to calculate risk. While one nationwide insurer might heavily penalize a recent speeding ticket, another regional carrier might specialize in non-standard auto insurance. You should never settle for the first quote you receive. Instead, gather quotes from standard carriers, non-standard specialists, and independent insurance brokers. Understanding state-mandated financial responsibility filings, such as the common requirement known as an SR22 or FR40 form, is critical. If your license was suspended or if you were convicted of a major violation, the DMV will require your insurer to file this document. The form serves as official state verification that you maintain the mandatory minimum liability coverage required by law. When shopping, you must explicitly inform potential insurers that you require an SR22 or FR40 for filing, as not all companies offer this service. Failing to maintain continuous coverage can result in immediate license revocation. Continuous insurance is your shield against legal trouble. Adjusting your policy deductibles offers an immediate way to lower your monthly premium payments while maintaining necessary legal protection. By raising your deductible from $500 to $1,000, you reduce the financial risk carried by the provider. However, you must ensure that you set aside that higher deductible amount in an emergency savings account to stay prepared. With these strategies, you can navigate the insurance market successfully and get back on the road with peace of mind. Re-evaluating the actual value and coverage needs of your vehicle is another highly effective strategy for cutting vehicle insurance expenses. If you are driving an older automobile that is fully paid off and has a low overall market value, maintaining full collision and comprehensive coverage may no longer make financial sense. The annual cost of full coverage on an older car can quickly surpass the actual cash value of the vehicle itself. Dropping your policy down to liability only can instantly slash your monthly premiums, provided you have the financial stability to repair it yourself. Enrolling in and successfully completing a state-approved defensive driving course is a proven method to secure insurance discounts. Many insurance companies offer automatic policy discounts to motorists who proactively complete accredited driver safety education programs. Taking a certified course can also offset negative points accumulated on your official motor vehicle record from recent traffic tickets. This step demonstrates responsible behavior to underwriters and equips you with enhanced road safety awareness to help prevent future driving incidents. Maintaining continuous, uninterrupted auto insurance coverage is absolutely vital for any motorist attempting to exit high-risk insurance classifications. Insurance algorithms view even a short lapse in coverage as a major indicator of extreme financial risk. A coverage lapse can instantly cause your future rates to spike regardless of whether your driving record was improving. To avoid accidental cancellations, you should enroll in automatic monthly electronic payments and set policy renewal reminders. Ensure that your insurance coverage never lapses, even if you are transitioning between different vehicle insurance companies. For individuals who do not currently own a personal vehicle but still need to fulfill court-ordered insurance mandates or prevent coverage gaps, non-owner car insurance is an ideal solution. A non-owner policy provides liability protection whenever you drive borrowed or rented vehicles, and it allows you to satisfy state SR20 filing obligations without paying the high cost of insuring a primary vehicle. Maintaining a non-owner policy keeps your insurance history continuous, allowing you to build up a consistent record of coverage. That will qualify you for standard, affordable rates when you eventually purchase another car. Exploring telematics and usage-based insurance programs can offer significant financial relief if you are confident in your current driving habits. Usage-based insurance programs utilize mobile phone applications or small vehicle tracking devices to monitor real-time driving metrics, including your average speed, braking intensity, acceleration patterns, and the time of day you travel. If you consistently demonstrate smooth, cautious driving patterns and maintain low overall annual mileage, your insurance provider may reward you, effectively allowing you to prove that your past infractions do not define your current road safety. Taking full advantage of every policy discount offered by insurance carriers is another straightforward way to lower overall coverage costs. Standard discounts include bundling your auto policy with renters or homeowners insurance and enrolling in paperless electronic billing. Additionally, insuring multiple vehicles or qualifying for safe equipment discounts through factory-installed safety features can shave a significant percentage off your bill. The specific type of automobile you choose to drive has a massive influence on the cost of your high-risk car insurance policy. High-performance sports cars and luxury vehicles carry significantly higher premiums because they are expensive to repair. Conversely, practical sedans and vehicles equipped with advanced driver assistance features and robust crash safety ratings cost far less to insure. Understanding the unexpected impact of credit history on auto insurance rates is critical for long-term financial recovery. By reviewing your credit reports, paying down debts, and maintaining consistent bill payment habits, you can steadily elevate your credit score. If you are a younger motorist, getting added to an existing family policy can yield huge savings through shared household rating factors. However, it is essential to remain completely honest with the insurance company, as failing to disclose household drivers can lead to claim denials. When private market insurance carriers completely deny you coverage, state-assigned risk pools serve as an essential safety net. Knowing exactly when traffic violations fall off your record allows you to proactively shop for new policies the precise month a violation drops. Avoiding common legal traps and unethical shortcuts is essential. Never attempt to lie on an application or register under a different address. Falsifying information constitutes legal insurance fraud, which can result in immediate policy cancellation and criminal charges. By maintaining continuous coverage and driving a safe vehicle, you can comfortably manage high-risk premiums until your driving record fully clears. Thanks for watching the video, subscribe this channel, and like the video. If you have any questions, leave a comment below.